Hi, everybody. This is Hyperwave. I'm Leah Wald, and we have Tyler back. And today we're going to talk about Hyperwave in full detail, Bitcoin as relates to where it is in the Hyperwave and in full detail. And in between each, I'm going to take your guys' questions. So that's how we're going to segment it out. Tyler, how are you doing? How was the trip?
The trip was exhausting, probably the toughest one I've ever taken. We were moving a Yamaha baby grand piano, so we had two sets of movers going to four locations in four states with a caravan of three vehicles that then became four vehicles, and it just went on for hundreds and hundreds and hundreds of miles. But it's something I've always wanted to do, and very exciting. I apologize for not being around the last couple of days. Leah obviously has been doing a yeoman job with Tone and with Vortex and with Giacomo and Jimmy. So you've got a very good perspective on what's been going on, but we've been getting a lot of questions, well-deserved questions about both Hyperwave and Bitcoin. What I'm going to do tonight is summarize. There's about 50 very important questions, but I don't want to take each of them individually as I try to explain what I think are the holes in the understanding of many of our followers. Let me just make this observation. It might not be correct, but let me make it anyway. I think people that have listened to the first 10 or 15 of our Hyperwave podcasts in detail and gone back and looked at them again and thought about them don't have the same questions that people that have come in for the last 10 or 15 or 20, which means that I've skipped a lot of the basics in the last 10 or 15 or 20, and so it's become confusing. It's even more confusing because of what's going on with Bitcoin. And in the middle of all of that, we started talking about GBTC and talking about other cryptos. And that has confused a lot of people because of the whole question of phase 2 and phase 3. So this is going to be a 10-minute, maybe 15-minute primer on basic Hyperwave. We're going back to the very basics, and I am going to be as definitive as I can. And as I'm making my comments, I will be answering the questions that I've been reading on Twitter and we've been getting on the live chat. So the reason I'm going to be doing this is I will be answering many of your questions without naming the questions. So we're both going to have to work fairly hard in this session. In fact, all three of us, you as listeners, Leah as trying to discern which are the important questions that, if answered, will answer many people's questions all at one time. And then me trying not to be too obtuse when talking about this very difficult subject. So with that as a very long introduction, I am going to do screen share, and we're going to go to what I think is the most important chart that we can discuss, which is this one. And you've all seen it. Maybe many of you have not seen it if you've come in late. But we flogged this chart to death for many of our opening podcasts. So I'm going to talk about these 7 phases, but in a little different perspective than you might have heard me before. Number 1, hyperwaves are very, very, very rare. In 40 years of looking for them, I have lived through about 6 total. in 40 years, 6 hyperwaves. And I did that from the perspective of someone managing money, a lot of money, in the billions of dollars for very large institutions. So I had a lot of resources. I had big teams of people helping me look for various things. One of the tiny, tiny things that we looked for were hyperwaves, but you just don't go out and find them. They have to come to you, and they do it very gradually. And then all of a sudden it dawns on you what you're looking at. Now, I have found, as I've said repeatedly, close to 400 now, but that's historical. I didn't live through many of those. Many of them were back in the late 1800s, the early 1900s, when there were a lot of panics and a lot of tremendous moves up in the market. And then in 1912 and 1913, the beginning of the Federal Reserve, which changed everything. Then 2 world wars, and then Bretton Woods in 1944. I didn't live through any of that, but there were a lot of hyperwaves because of changes that were taking place in the macro world economy. Now, there were very few hyperwaves in the 1950s and 60s and 70s. But then we began getting a slew of them towards the end of the 1970s because of inflation. And then we started in the 1980s getting them in stock markets around the world, culminating basically in the year 2000 with the NASDAQ top that we've shown over and over again. Now, I'm giving you this history because many of your questions are saying, maybe this is a hyperwave, maybe that's a hyperwave, maybe all cryptos are in a hyperwave. So I want to be very, very clear. These are very rare and they do not last a short period of time. Let's take a look at this chart. And let's just think about what this phase 1 is. It seems like it's a throwaway, like there's nothing really here. It's just a flat market. Remember, I have said that there are 4 up phases in a hyperwave. There's not 9 or 13 or 3 or 44. There's 4. And there are 3 constraining phases, number 1, 5, and 7. And here is the good news and the bad news about a hyperwave. The bad news first. Every hyperwave ends back at where it began, with only an unbelievably small set of exceptions. So whenever I see a hyperwave, depending on where we are in it, what I know is if it's early in the hyperwave, I've got years in front of me, years, not days or weeks, but years in front of me of this thing going higher and higher and higher. But I also know right from day one that at the end, the price is going to be all the way back where it started, except for a few very rare exceptions. Okay, so that's the plate. That's all there is to it. Let's go quickly through what these phases are. Number 1 is restraining, because the price must stay below this one line for years, not weeks or months, but years. And only 1 out of 1,000 securities or commodities or indexes or numismatic coins or thoroughbred racehorses or impressionistic paintings or real estate, either commercial or residential, on an island or on a continent. Only 1 out of 1,000 of all of those things ever, after being in a phase 1, will end up going through a hyperwave. So there is nothing special about a phase 1, except one thing. it is needed to launch a hyperwave. You need to build a long, strong runway, a long, strong foundation where for years buyers and sellers could not get the price to go above that phase one line, so that when phase two begins with a break above phase one, the price breaks above phase one finally, after years and years and years, finally gets above it. What you'd expect to happen does happen. The price goes way up because the bulls have just beat the bears. And usually you get a big spike and then back and forth and back and forth and back and forth. But what you note in a hyperwave, if this is going to turn into one, is that every time it comes back down to some line, it will not go any lower on a weekly closing basis. It will break this line from time to time, interweek, but it will not do it on a weekly closing basis. So you actually get an angle going up. It doesn't matter how high you get up and how long it goes. It usually will go for a year or 2 or 3 years, a phase two. You are still not in a hyperwave. And this is essential for everybody to understand about all the other cryptos and our discussion of Bitcoin. Phase two does not mean you are in a hyperwave. Phase one definitely doesn't, because only 1 out of 1,000 will ever become one. But in phase two, the odds start building greatly that maybe you have a hyperwave. And about 1 out of every 4 that make it from 1 to 2 are going to end up going all the way through 7 phases. But that's still pretty good, 1 out of 4. But I can never call something like the cryptos, like GBTC, that is a clear phase two without any acceleration into a 3 or 4, a hyperwave yet. What I need to call something a hyperwave from that point forward is phase 3. And when I get a phase 3 acceleration up from the angle of phase 2, sharp enough that everybody can see, yes, that is clearly going up at a different angle than it did before. Now the probabilities have just shifted where I can call everything in a phase 3 a hyperwave. And that's the beginning of something very exciting, because now we're going to move anywhere from 8 to 10 to 15 to 20 to 40 to 100 times the value of that particular asset class between 3 and 4. And they're all over the lot. All you know is if you've been watching something break out of 1 and go into a 2, you should act on it. Why? Because you've just broken tremendous overhead resistance at 1. It has nothing to do with the hyperwave. It has to do with the bulls have just exercised their power over the bears, and you've broken above a long, many-year-long overhead resistance. So you should be in it anyway. If it turns out that the 1 in 4 of 2s that go on to do a whole hyperwave, you happen to pick one of those in phase 2, good for you. You don't have to sell anything or think about selling from phase 2 all the way through phase 4. I've shown you some examples where just 3 trades occurred over a 15-year period where you were long all the way up and you were out or short all the way down. That's the way you play a hyperwave. Now, those that want to trade in and out of a hyperwave, when you go way above a phase 2 line, you can take profits because you know you're going to come back down to that line at some point. Now, you might leave a lot on the table, but some traders want to do that. Same thing with the phase 3. Same thing with the phase 4. When you get into phase 4, you know you're close to the end, not in terms of time, and maybe not in terms of price, but you've run out of phases. There is not a up 5 phase or an up 6 phase or 7 or 8 or 9. It always ends at 4. When 4 is broken to the downside, everything begins to fall apart, beginning with this tremendous drop in phase 5 and this very unusual, but it makes a lot of sense, move back up in phase 6, which traps a lot of people into thinking this hyperwave stuff is nonsense. There's no reason to get out. It's going back up. It's going to keep on going back up. And then we start this long, slow process of going all the way back down to the beginning. Okay, what I have just described to you is a hyperwave. Anything else can be either a bull market, it can be a bubble, it can be a tremendously appreciating asset. It can be an asset class that's going way, way up. It can be an individual stock. But unless it goes through all of the phases I've just shown going up, including number 1, it is not a hyperwave. So I started by saying how rare these were. I've gone for years forgetting about hyperwaves because there were none on the drawing board. But what brought Leah and myself into the crypto space a year ago, and we started these blogs just 2.5 months ago, is that it was pointed out to me that Bitcoin was in a hyperwave. And I spent several weeks studying the prices going back 10 years, and I came to the same conclusion, and therefore we started this hyperwave channel. Bitcoin was, is, and I believe will be in the future in hyperwaves. The question is, where are we now? And before I get to that, I'm going to go off screen share, and I'm going to ask Leah to give me questions having to do specifically with hyperwaves as opposed to Bitcoin specifically at this point.
Okay, great. You guys, thank you so much. Great questions. Also, Tyler, just noting that everyone's quite brilliant. You guys are brilliant in this chat, and I'm seeing the answers that you're giving to other questions, and I'm seeing completely spot on answers. So brilliant viewers that we have. The one
I'm just going to close this door. The cat just opened it up, and I will be right back. But go ahead and ask questions. I can
For sure. It's either Thor or, all these things you guys have been seeing today. So Tyler, how do you map hyperwave onto what influences the price in real time, like the utility of the asset and speculative psychology? I don't quite see how this is anchored to what is happening in the real world.
Just the opposite. That's what's so fascinating about hyperwaves. It's very difficult to tell from a fundamental point of view what is it that's so big about a particular asset class at the moment that is causing it to be in a hyperwave. But this is the important point about hyperwaves, which is what makes them so rare. Hyperwaves only occur when a major shift in world macroeconomic finance is taking place. All of the examples I have seen are either directly or correlatively linked to some massive movement that is taking place worldwide. And that's what drew me to the Bitcoin and the crypto space, because I wanted to learn what is it that is now causing hyperwaves to form. Let me just give you quick examples. I've shown you 40 or 50 different examples during the 1920s between World War I and World War II of hyperwaves in different countries around the world during the 1920s. The phase one of almost all of them began even before the Federal Reserve started. Many of them started in 1908, which is when the US phase one stock market hyperwave began. And it went from 1908 until 1921, phase one, from 1908 to 1921, in which the Dow Jones Industrial Average could not get above 100. It got up, hit 100, and fell back. Did it again and again and again and again, all through World War I, kept falling back. Finally, it broke out into phase two in the early 1920s. Well, what was happening then? Fundamentally, the question was, how is this grounded in reality instead of just, this funny little shaped thing that sometimes comes about? Just the opposite is true. Some massive forces are coming together that are forcing prices in asset classes to move in a violent fashion over a very long time period. And clearly what was happening between 1912, the beginning of the Federal Reserve, and the shift of having the executive branch or the judicial branch or the legislative branch in the United States be in charge of everything, this funny little group was named as the group that was going to control money, finance, panics, interest rates, banking, on and on and on. Then you had World War I. Then you had the Germans losing and Europe in tatters. And then you had hyperinflation in the Weimar Republic in Germany, which led to a whole political movement under Adolf Hitler that resulted in everything that occurred in World War II and everything that led up to it. In between, there was a worldwide depression. So all of these countries in Europe, even in Asia, the United States went through hyperwaves, 1920, 21, 22, 23, 24, all the way to 1929. And then you had the top, phase four, the crash, phase five, a recovery in phase six, all the way down below where it started in 1933, 34, 35, the end of the hyperwave, and the beginning of a 23-year period for the markets to regain their strength. Took until 1953 in the United States after peaking in 1929. That's one example. But there's all kinds of correlative hyperwaves that occurred because every index like the Dow is made up of stocks. So I've shown you 40 or 50 of those stocks that were in hyperwaves, 7 phases, the same 7 I just showed you. And then we had another phase one begin in 1965 in the United States with the Dow Jones Industrial Average. And it went, believe it or not, from 1965 to 1982. Phase one, 17 years. The stock market could not get above 1,000 on the Dow for 17 years. What was happening during that time? Well, for all of you that have history background, you can answer that very quickly. But we had the beginning of the first time that this country began running deficits in 1961, even before the Vietnam War under President Kennedy. And we've run deficits every year except for 2 years under the Clinton administration in the 1990s. And then we've gone deeper and deeper. Each of those deficits every single year is piled on top of each one that came before it, which equals the debt, and the debt continues to grow. That had never been true in this country until the early 1960s. So it's logical that the stock markets began a phase one hyperwave in 1965 at 1,000 on the Dow, and it took 17 years, including the Vietnam War, OPEC oil crisis, the unhinging of the gold standard in 1971 under Nixon, the impeachment of Nixon, the appointment of Ford as president, who then pardoned Nixon, the crisis in which the U.S. was being held, U.S. soldiers were being held captive under Carter, and the biggest thing of all, inflation in 1975, 76, 77, 78, 79, and 80, running up from 2% at the beginning to 20%. We've got 2% inflation today. We had 20% in 1979 and 1980. U.S. Treasury bonds were yielding 15%, and you could go to a bank and put your money in a money market fund that paid 20%. Now, 95% of the people listening to that did not live through that. But your question about tying hyperwaves to the real life world, it's the other way around. It's the real life, real macroeconomics that causes hyperwaves. So during that period, we had a hyperwave in oil, hyperwave in gold, hyperwave in silver, hyperwave in platinum, hyperwave in palladium, cocoa, sugar, because of the soaring inflation rates, which commodities respond to by going up in price to make up for the differential. Okay, then we had the Japanese Nikkei run from $500 to 38,800, 76x during the 1970s into the 1980s until it peaked in 1989. And you're going to have to go back into history to understand what happened in Japan that caused them to explode in terms of real estate, stock prices, political and economic influence. But that's what caused the hyperwave, not the other way around. I've shown you the NASDAQ over and over again with the dot-coms and technology. So that's a lot more than you wanted to know, but it's a lot less than you need to know to understand hyperwaves. These things, when they come along, are already telling a story that it will take us 15 years to know what that story was. We have some speculation of what Satoshi was doing in response to the world economic financial stability crumbling back in 07 and 08. And right after that, a year later, he came out with his formula for fixing the problem. And that formula was Bitcoin and the blockchain. And here we are 10 years later, we have 2,000 cryptos that have nothing to do with what Satoshi was trying to achieve on a world economic financial stability basis. And that's what's causing so much of the confusion. So this was an important answer for everyone. And that's why I took so long to get through it. But after that, I'm going to turn it back to Leah.
Thanks, Tyler. Okay, so two quick things. One quick thing is your favorite, to speak really quickly to Volcker, but in relation to what you were just saying. But two, I like this question. Can we change the course of a hyperwave once it's acknowledged?
That's a very good question, but and there's no way to answer that. Technology is the basis of many of the hyperwaves we're seeing, because Moore at Intel back in the late 1960s originally was talking simply about, for the first time in human history, we've been able to force or cause or participate in a thing called exponential growth. It happens naturally in biology, in like an algae pool. If a very small number of spores begin to develop, you get exponential growth. You go from 2 to 4 to 8 to 16 to 32 to 64. And if you chart it, it's exponential. It happens naturally under certain conditions, but for man to actually participate and cause exponential growth did not really come along until the computer chip. It's true that 100 years later, during the later part of the Industrial Revolution, what we had was, for the first time, the idea of a line of production where everyone on that line did one small job instead of everybody working on one project like building a car. And what that did is it rapidly increased the total number that could be created. That's a different ball game than what we're talking about with exponential growth of a product that gets cheaper and cheaper and more powerful in terms of memory and speed over time in an exponential way, where everything keeps halving over either an 18 or 24-month period. It's changed over the last 60 years, but it's constant up till now. But he was only talking about a computer chip. But the implicit part of that discussion is that you have to design and make computer chips, and therefore you need materials to change and for new technologies to allow speed and memory and strength. And therefore you had a burgeoning of factors that go into making a computer chip, each of which begin to contribute in an exponential function. But forget that. When the internet came along, we were able to use all of that preceding power and speed and memory in order to almost infinitely grow communications, telecommunications, information sharing. And that's what Ray Kurzweil is talking about. You cannot understand hyperwave in my mind. Maybe some of you can. I couldn't. I knew what hyperwaves were. I'd seen them before, but until I read all 5 of Kurzweil's books that I've listed before, and you can look them all up, Kurzweil, the head of Google research right now, but much more before that. His books explain exponential growth across all technologies, not simply having to do with computers and computer chips and artificial intelligence and everything else. So your question about can the formation or the speed or the form of a hyperwave be changed by technology? The answer is absolutely yes, but not in my mind once a hyperwave has begun. And what I mean by that is the speed with which information flows into the formation of hyperwave takes into account on a daily basis all new technological changes. And we've had probably 24 questions about this, that what if such and such a thing happens next Wednesday? Won't that change what's going on with this hyperwave or that hyperwave or with any technical analysis? And my answer has been for 40 years on a growing basis, and is even more so today, that anything that occurs is instantly transformed from information into data, into price, into a chart instantly. Now, instantly means different things for you and for me. If you are a trader, you understand that news items do not influence the direction of an asset price, except for very short periods of time. And we've talked about the assassination of presidents and of famous people and of recessions and of crises and of meteorological, earthquakes and hurricanes and tornadoes and mass shootings and even wars. Go back and look at what happens to prices, not at the moment those things occur, but through the period of time that they occur, and you'll find that there's little or no effect on what was happening, what is happening at the point you're looking, and what happens later. I happen to have a set of charts that are very rare that comes from a fellow who's no longer with us out in California, whose name was Richard Russell. It cost a lot of money, but he printed yearly charts of all the major indexes, just 1 year at a time, going all the way back to the late 1800s. So the book is made up of charts that are about that big, and each one is a different year. 1965, broken down by months, weeks, and all the news items during that year. And you can take the news item and go right down to the chart, and you can see for 1 day or 2 days there's a little blip, and then it goes away. So no, what you must know about prices is that everybody in the world that is participating in that market just voted. Everybody. Not just the whales, not just the smart people, not the people that have been doing it for 30 years, not the people that just came yesterday, but everybody. Everybody votes by buying or selling. And they do it with information that other people don't have, but it ends up as information that goes into price. Price is absolute. The fundamentals that go into price affect price, but don't change price. When a corporation comes out with an incredible quarter of earnings, how many thousands of people along the way do you think knew that information before it was released to the public and have already voted in terms of the price? That's not manipulation. That's a different question. I've made the comment here recently because a lot of people said, it sure looks like Bitcoin's being manipulated because at this time every day, certain things happen. My response to that is every market I have participated in, seen, studied, every market is manipulated. The manipulation results in the change of price. That's in the price. The manipulation is in the price. So the question is, can technical analysis pick out the fact that manipulation is going on? Technical analysis doesn't try to. It doesn't need to. It simply records what all the votes look like and what they portend for the future, or where you are in either a predictive mode or a what's called a momentum mode, which is current. Where are you today with momentum having to do with oscillators? Where are you having to do with things that occurred before, like moving averages, on and on and on. But it's all in the price as of the moment you're looking at it. Why does it matter to you? If it was 100,000 smart people that really understand Bitcoin that were buying, or one large whale who just had so much money, could do anything he wanted to it, whatever the vote is, that's what's going to happen on the price. And therefore, trying to find those reasons, you're going to pull out your hair. And what I'm telling you is it will not help you in making decisions one way or the other.
had myself on mute. Thanks, Tyler. All right, one last question I think you can go through quickly. We've said this in previous vlogs, but just to reiterate, specifically, well, the question is, you said that after phase 3, approximately 85% can go through all the other phases. How much does that percent increase after the waves 4 through 7? And then we can move to Bitcoin.
Right. I have never seen, okay, 85 out of 100 that have moved from 2 to 3 are going to go through all 7 phases. It goes to 100% at phase 4. I've never seen a hyperwave that's gone from 3 to a 4 that does not go to a 5, 6, and 7. Maybe one will. I've never seen it. I'm asking people that are interested in this topic to send me examples, and we've got a great response. I've got a lot of very interesting individual stocks that people have sent me. I would just point out that almost all of them are correlative hyperwaves, meaning there's another hyperwave going on that is causing those hyperwaves to happen, like technology. When the NASDAQ is in its own hyperwave, you can imagine that many hyper or NASDAQ stocks will also be in hyperwaves. But which came first, the chicken or the egg, or did they happen simultaneously? I gave you the example of the Dow back in the 1920s. Clearly, it happened simultaneously. The index that is moving up in a hyperwave is made up of 30 if it's Dow stocks, 500 if it's S&P stocks, 2,000 if it's NASDAQ stocks, 2,000 small cap stocks if it's the Russell 2000. So by definition, those indexes cannot go up in a hyperwave by themselves. It must be individual constituents that are driving it. So what you need to understand is who are those constituents and what's driving them. When you're talking about the FANG stocks, which are the key drivers of technology in terms of price over the last 5 years, you're only talking about a very small handful of stocks. But because, as I explained earlier, they are cap-weighted companies, which means they score more influence in the overall index than other smaller companies. So the question was having to do with
the percentage, specifically for a confidence interval.
I said, we go from basically 0 in phase 1. 1 in 1,000 to me is buying a lottery ticket, not a big lottery ticket, just a little one, 1 out of 1,000, which I've never done. I've never bought a single lottery ticket. As soon as you get above 2 to 1, I'm not really too interested. 4 to 1, which is phase 2 in a hyperwave, just get a deck of cards, pull out 4 cards, have one of them the ace of spades, flip them over and say, I'm going to put all my money on this because it's a 1 in 4 chance I'm going to pick the ace of spades. Do it 1,000 times and you're going to get it 250, and the other 750, you're going to lose all your money. Unless you learn how to manage money, manage risk. 1 in 4 is fine, but you don't put all your money in it. When you get to 85%, which is phase 3, and there's nothing biblical about these numbers I'm throwing out. It's a small set of 400 of them. It's not like I've got 400,000 that are statistically significant. I'm telling you that my experience is something like 85% of the ones that I've seen, once they've taken that term from phase 2 up to an acceleration in phase 3, keep on going. Every once in a while, one will break out, but it's very, very rare. You can count them on 2 hands with only 400 examples. But when I seen something accelerate out of a phase 3 into a phase 4. I've never seen one that did not go through a 5, 6, 7 back to the beginning. Now, a lot of the confusion, I know, comes from that point of back to the beginning. And we'll talk about that specifically on Bitcoin, and we're going to do that now. Because of the whole question is phase 2, phase 3, or did Bitcoin go through a 1, 2, 3, 4, 5, 6, and is in a 7 that has been held on them, saying that, look, I gave you an archetype that works a vast percentage of times in a particular way. But every once in a while, something comes along that makes it a little bit different so that I can't make the definitive statements I've been making. And Bitcoin clearly is one of those. The NASDAQ was clearly one of them. And I've mentioned gold and the Dow at various times also. So with that, if that's a good start on the questions on Hyperwave, we're going to go back to screen share and start talking Bitcoin.
Bitcoin time. Everybody else, I noted your questions. There's some good money management questions in there for you too, for traditional markets, which we'll cover a different day. So Bitcoin time.
Okay. This is my best view of the current situation of a hyperwave in Bitcoin. And all I'm showing you here are the original lines 2 and 3. Now, when I say original lines, I mean when they were drawn, they have never changed. They didn't change when this was going on, or this was going on, or this was going on, or this was going on. They just sat there. I, in real time, had drawn phases 4, 5, 6, and 7. We've been getting a lot of questions about why do I use linear and not logarithmic? Well, I use both all the time, but I always draw hyperwaves using weekly bars on a linear scale. I started doing that back in the 1970s by hand, and then some services came along where I could buy charts that were weekly. Almost all had to do with commodities. But there are services, there were in the 70s, 80s, 90s, and still around today, that you can buy chart books of monthly, weekly, daily charts of every stock traded in the United States on all exchanges. NASDAQ, New York Stock Exchange, all the S&P 500. And I'll give you the references to that at some point. They're expensive. They cost $300 or $400 every time you buy one of the books. But they'll go back 30 years. So you can look at every stock and you can quickly turn the pages and see, does that look like a hyperwave? Does that look like a hyperwave? Does that look like a hyperwave? Until you can start picturing what it takes to become one of these things. So on this particular chart, the real acceleration from this phase 3 line and the phase 2 line occurred over a very short period of time. But I noted when I started drawing these that we had seen 2 previous hyperwaves, or very close to hyperwaves, in the early years of Bitcoin. And you've seen Tone refer to them and a lot of other people. Parabolic Traveler and others that will zoom back and show that what you're looking at on this chart you have seen before if you've been around at least 4 years, and if you've been around 7 or 8 years and looking at charts, you've seen this before in Bitcoin. And I knew that as this one was developing, and I was in it because it was clearly in a phase 2, accelerating up into something. I didn't realize it was accelerating that quickly, but I would draw from this closing low and a lot of people have been asking about why don't you draw it here, or why don't you draw it there, or my answer is that you always draw from, depending on if you're in 2, 3, or 4, which are up, or 6, which is up, or 1, 5, and 7, which are all down. What you want to do in the up cycles is draw from the lowest closing weekly points you can. Now, that's almost going to be always a red candle or a negative candle. So you see me drawing the 2 from these low red candles with just one observation you have to make. Connect that with another low in a straight line so that no closing low intervenes. That's all you have to do. You want the lowest 2 points in a move of acceleration in which no intervening closing prices close below that line. Now, you can draw a lot of lines like that, but they won't be the lowest line. You always go for the lowest one. So 2 sits down here at about $4,000 now, just drawn off of these very simple points back here. I know it's a 2 now. I didn't at the time, because if it had broken down anywhere after I had drawn that line, it would have been 1 out of the 4 or 3 out of the 4 that wasn't going to make it into a hyperwave. And that's it. It's over. But it didn't do that. It ran up from that line, ran up again, came back down, and rather than even coming and touching it, it began to show an acceleration between these 2 low points on a closing basis, in which the following 2 weeks broke that line, but not on a closing basis. And it turns out that months later, that line turned out to be powerful and turned back this fall and this fall and this fall and this fall, and then finally broke down a week ago when I finally declared that phase 3 has just broken. Now, I have not been talking about phase 4, 5, 6, and 7. And the reason I haven't is because in the earlier hyperwaves with Bitcoin, when they fell after going up through 2, 3, and 4, and then went through a 5, 6, and 7, they didn't get back down to 1. They never made it down there. They held either at 2 or at 3 of that hyperwave that just crashed. Now, that doesn't mean that each hyperwave wasn't a complete hyperwave with a wave 4, a 1, a 2, a 3, a 4 that's finally broken. When we finally saw this acceleration pattern that went on for week after week after week and just shocked every technical analyst other than hodlers or those that understand parabolic moves like Parabolic Traveler, it was just more of the same kind of movement that we had seen back in 2013 and 2014 and back 2 years before that, and a bunch of mini ones when it was down, less than $20. But this time we saw it go all the way up. And when this final angle was broken, we sold all of our positions for clients and family and friends, not because of any other reason than I'm not going to wait from $14,000, $15,000, $16,000, $17,000 to drop back to something that's down around $6,000 or $7,000, knowing what I do about what happens when a hyperwave in a phase 4 is broken. Now, I've been catty to a certain extent about saying I really felt that phase 3 was going to hold. And I did jump in the day after these breaks when we had the big reversals with 25% positions of targets for various clients. So if my client was, if we had a 10% target in Bitcoin for all of their assets, in the run up, we had people that were 100% in the crypto space because of the acknowledgement of what an 85% probability of a 3 tells you and 100% probability of 4 tells you, which is it's going up much, much higher. It's so rare when it happens. There are people that want to take advantage of it. Everybody's got to make their own decision how to play it. But when I know what happens when a phase 4 breaks, with the possibility of a phase 5 drop, a phase 6 rebound. In this case, we drop all the way from 20,000 down to 11,000, and then go all the way back up to almost 17,000 from 11,000, all in a 4-week period of time before we start this, which I don't want to be in because this is the beginning of what looks like a phase 7 until we reversed off this phase 3 line. And now I go back to the earlier hyperwave in Bitcoin and the earlier one before that and started thinking, this is one of these weird, funky hyperwaves in which we have nested hyperwaves that develop for a period of time. They go through the full 1, 2, 3, 4, 5, 6, and in 7, they don't make it all the way back down to the beginning and then start a new one. So I am willing to tell you and willing to make the fiduciary call for clients that if this 3 holds 1, 2, 3, 4, 5, 6, 7, 8, 9, I'll give it a 10, 11 times, that it is substantive and we have a strong probability that this wave 3 is going to hold and we are going to make it back up. And the other absolute about hyperwaves, just like when a 4 breaks, it's over and you're going back down to the beginning, other than very rare examples. The other thing is whenever you get back up to the old high, you know, to and above the old high, you know you are still in the early stages of a hyperwave. If we could have gotten through this 10, 11, 12,000 area that I started calling the Valley of Death, because we found 13 very heavy areas of resistance, and we got turned down 1, 2, 3, 4, 5 weeks after this first initial attempt to break through the phase 3 line, and we couldn't do it. And then we came back down to it, and then we came back down below. I said, that's it. There is no phase 3 line anymore. We are still in this 7 from the top. Now we've reduced the probability of success in terms of immediately going higher dramatically down to the phase 2 line. So I keep saying I see no support below this phase 3 line all the way down to the phase 2 line. So I've gotten a lot of questions. Does that mean we have to go down to the phase 2 line? And will we do it quickly? What's the average time it takes once you've broken a phase 3 line to get to the phase 2 line? I can't answer any of those questions because it's so rare that you get these nesting kind of hyperwaves that we are having to take it a step at a time by using what we know are rules, using those rules to override making silly mistakes based on hope or based on a lack of knowledge about all of the things I've already outlined about what this thing is telling you in terms of why it wants to get back down below $1,000, which is the phase 1 line. I kept open the possibility because there have been a couple of instances of dropping down below the phase 1 line, in this case at around 1,000, and starting another hyperwave. I believe there is a reasonable possibility of that happening. I would much rather we hold the phase 2 line and we don't test Tone's 1,300 and we don't test my 1,000, but we get dramatic buy-in by all of the voters all over the world finally coming back in and saying, okay, it's clear that we were wrong about the crypto space in general, but we definitely are not wrong about this one particular Bitcoin. And we're willing to go all in, get out of the 50% in the crypto world and all the other cryptocurrencies and get behind this one. Okay, that's a lot of stuff. I'm sorry I'm going on for so long, but this is important stuff at an important time in history. And the fact that we're beginning to see some things happening with not only gold, but also with the huge markets, meaning the bond market and the stock market, in which we're getting some very interesting signals on both of those enormous asset classes that lend credence to the fact that there is a massive shift attempting to get underway. And Bitcoin very probably is an important player in that entire shift. And with that, I'm going to start trying to answer some more questions.
Does the amount of money play into hyperwave analysis when overall market cap goes from 800 billion to 300 billion? Where did 500 billion go? So I guess the overall question is, how much does money play into the overall hyperwave analysis? Especially, I would say, given what a small market cap we have with Bitcoin.
Well, that's the problem in my mind with Bitcoin and the cryptos is they were living in their own world for 10 years. They were incubated from outside influence. It was just the people that really believed in it. Very few people understood it or tried to. And then all of a sudden, the price appreciation began taking place so quickly that it pulled in thousands, hundreds of thousands, millions of others, and spawned an entire industry that has nothing to do with Bitcoin or blockchain, having to do with law and accounting and promotion and marketing and a lot of other things. But clearly, depending on what happens with the blockchain debate and the platforms that are being built, and all of that happened with nickels and dimes. I know, this guy made $1 billion and this guy made 100 million. Folks, these are nickels and dimes right up through today. $850 billion seems like a lot of money, but I've shown you, a number of companies, individual corporations that all have more money than all the money in Bitcoin. And there are individual corporations in the world, forget just the United States, but in the world, that have more money than all the capitalization at the peak when Bitcoin was 20,000 and all the other cryptos were 5 times higher than they are now, individual companies that had higher capitalization than the entire asset class. When you talk about, the bond market, you're talking about $75 trillion. We have 25,000 mutual funds in the United States that have $20 trillion in them. We've got 10,000 ETFs that have trillions and trillions of dollars in them. Now, I'm not diminishing the sector. It's the fastest growing financial sector in the history of the country. But it's still tiny, and it's being beset on all sides by, first of all, people internal to the ecosystem, and now by regulators and by governments and by on and on and on, and a watering down of what the story really is. That would be my explanation of how something that did so well up to the $20,000 level could be doing so poorly now and breaking down week after week. This thing needs a rest, and it's going through a rest. So far, it's 4 months. It might be another 4 months. It might be another 4 years. I don't believe it is going anywhere. I think the strength of the story of Bitcoin, once it can get all these barnacles off the hull that Leah talked about the other night, that have been gathering on the hull of this amazing ship, and started out with just 1 or 2 or 10 or 100, and then 500, then 1,000. Now the whole hull of the Bitcoin ship is covered in barnacles, and the barnacles are slowing the ship down to the extent that it can hardly move forward, having nothing to do with all the regulators and what's happening with the mining and everything else. And I'm not drawing conclusions about what will happen, because the only thing I care about is what do the charts tell me, and what do those systems like the Elliott wave system, the sequential system, the hyperwave system say about what the voting of everybody that's involved in the space is saying. And that's all we're doing, is we're evaluating those votes. We're counting the ballots. If you don't like the count, then get other people to put in votes on your side. But when the votes are coming in and price is falling, the market is speaking. Okay, so back to you, Leah.
Sounds good. 2-part question. Since phase 3 line has been broken, do we have to test phase 2 line, or can we go up again without testing it? And part 2, let us assume phase 2 line stands. Do we establish a new phase 3 line, or we start counting all over from the start again?
No, it does not have to go back to phase 2. But also, no, there is no phase 3 anymore. In Bitcoin, there is no phase 3 line. That's the definition of breaking a line. There is no phase 4 line anymore. There is no longer a phase 5 because we ran up from 11,000 to 17,000 in phase 6. Each one in a sequential fashion exists until that line disappears. Now, when you're coming down from a 4, 5, 6 into a 7, by definition, you are going to go down through the angles of the old phase lines. And normally, they don't slow you down at all. Go back and look at all the old hyperwave charts and extend the phase 2s and 3s as you know you're in a 7 going down to below 1, and you will find very often in that drop of phase 7, you don't slow down. You go right through those old phase lines. Here, we've got the very unusual situation of a phase 3 line that lasted until a week ago with 11 different touches. That convinced me how powerful that phase 3 line was. But it doesn't change my attitude at all that now that phase 3 has been broken on a weekly closing basis, it disappears. It has no influence for the current Bitcoin hyperwave. However, there is one line and then another line, $3,000 apart, one at 4,000, which is phase 2, and one at 1,000, which is phase 1, who have not broken down yet and might not. Phase 2 could hold this drop at 4,000. Other technical systems are calling for some strength somewhere between the $3,000 and $5,000 area. To me, as long as you don't get below 4,000 on a weekly closing basis, that is evidence of bouncing off of phase 2. And if that's the case, then we will build into a new phase 3 line if it accelerates off of phase 2. But you tell me, if phase 2 is now what is supporting this hyperwave, what is the probability it's going to go into a new hyperwave through all 7 phases? You know the answer, 1 in 4. We've just dropped from 85% a week ago down to 1 in 4 that phase 2 is going to hold. Well, get out your cards from your deck, get the ace of spades, put them down, pick one, and if you pick the ace of spades, that means that in that case, the phase 2 line holds, and we might bounce up and along it for a year, 2 years, 3 years, 4 years, like we've seen in the NASDAQ, like we've seen with a number of those tech stocks that we've looked at, where they reestablished a new phase 2, 3, and then finally a 4 in some cases, but have not yet gone into a 5, 6, or a 7. So my answer to you is no, we don't have to go down and touch 2. We could turn around from it, but that does not mean that 2 disappears. 2 is still there from now until forever, until it is violated on a weekly closing basis, and then it disappears. If we go through phase 2 on a weekly closing basis, Hyperwave tells me we're going to go to phase 1 at around 1,000. I'll give you a much more detailed number than that if we get down there. And at that point, the Hyperwave is officially over. Put the gravestone up, look back at it, and it will become a historical example in the future for other people that are studying hyperwaves. That does not mean that this won't be an example of one that goes right into another hyperwave. And I've got substantial fundamental reasons to believe that might be the case. That it doesn't get down to phase 2, it holds, goes up, and then comes down at some later time to phase 2 when phase 2 is much higher than it is now, and then accelerates into a phase 3 in the future and upwards. If we don't hold phase 2 and we drop down to phase 1, there's a small chance, but a chance that we will begin another hyperwave, and you will know that right away because we'll bounce from the 1,000, or in Tone's case, the 1,300 level, which I would prefer not making it all the way down to 1,000, stopping, 30% above it, and then starting up again. So there's a lot to happen in the future, but I just wanted to make it as clear as I could from my perspective where we stand.
Tyler, here's the reiterating question from the audience. Does breaking phase 2 confirm phase 7? Very simply question.
Phase 7 is already confirmed. It was confirmed with the drop from 20,000 down to 11,000. That was phase 5. Phase 6 was clear because we came all the way down to the old phase 3. We tried to hold it and then we broke it. When phase 3 was broken, that confirms that we are in a 7 with a very small chance that we are held up in that 7 by the phase 2 line that is about a 1 in 4 chance of happening.
I think that that's pretty much it in summation of the questions, because you've covered most of them. I think that potentially, I see a new one. I would, before I ask that one, I think before we continue to scare everybody, one person asked, when would you buy back in? And would you?
I would definitely buy back. I would have bought back in with another bounce off of phase 3, but I would have done it with a quarter position. If we got through the 10,100 and 11,100 field of resistance that I've talked about over and over again, I would have put in another 25% position. And we took out that old high at 12,800 approximately, I would have gone fully in. Because at that point, it would have looked to me as if we were going to retest the old high. And remember what I said, anytime the old high, in this case, 19,666 on Bitstamp was exceeded on a weekly closing basis, that means that we are still in the early stages of a hyperwave. But it did not happen. Phase 3 broke down. You cannot believe how discouraged, disappointed, disillusioned I was when that occurred. Because now it just means time has got to go by for this to rebuild. This meaning not only the whole crypto space, but particularly Bitcoin and Bitcoin prices. That's what Hyperwave is telling me.
All right, Tyler, I think we're done with our questions for tonight.
Please keep your observations of other hyperwaves coming. I'm cataloging them as fast as I can and studying them. We had another one come in today that's fascinating. I haven't had a time to look at it in detail, and it's not really directly in the tech space. They're all over the world at various times. We're seeing more and more things happen. To me, the biggest, the most important, the most interesting, and the most influential is still Bitcoin. So do not interpret anything I've said other than price is the price. It determines gains and losses, nothing else. Not what you hope, not what you wish, not what you think, not what you believe, only the price. And therefore, you must react to the price as it gives you clues of where it wants to go. I think the next 2 years, 5 years, 10 years are going to be unbelievably exciting in the Bitcoin world. We just have to be patient, but more importantly, you have to be realistic.
Thanks, Tyler. Everybody noted on your traditional markets questions. I think just given the length of this video and keeping it specific to Hyperwave and Bitcoin Hyperwave, we'll keep it there and then answer the traditional markets questions, which are all very good in a future vlog. And on that, thank you everyone for watching. Thanks, Tyler. And
thanks, yeah. And thanks everybody for staying up to listen to this. I apologize once again. I've been on the road, but we will start coming fast and furiously once again.
Absolutely. And we'll keep watching this and we'll see what happens on close at Sunday. But everybody have a wonderful evening. And thank you, Tyler.
Great. Thanks. Bye-bye.